Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 24th of April. Starting off with the FTSE 100, where despite all the gloom and doom and the reports of AIM being dead and the stock market being dead in the UK, etc., we're at record highs. I didn't see anybody predicting that, well, not that I know of, apart from obviously one or two tentative comments here. But we've got this market now through that red resistance line there at 80.60, end of day close above that, and we could be looking at the top of that rising December trend channel 82.30 by the end of next month. I'm saying by the end of next month on a conservative basis, because obviously after 25 years of waiting for the FTSE to break out, one wouldn't want to jump the gun. In terms of the overall pattern here, which I have actually shown here a few weeks back, we're in a rising trend channel from 2007, top of the channel there, 8,500, and looking for that by the end of June as a conservative target. What will be interesting, obviously, then is if we go through 8,500, what the next sort of level up will be. But at the moment, 82.20, 8,500, obviously the big picture target. On the downside, back below the 8,000 area, then we're looking for 78.80, which was that temporary April floor for this market. You can see the consecutive bullish candles, and even yesterday was a bullish candle despite the Bank of England's hawkish comments. Moving on to the DAX, and here you can see that we're back in bull mode with a bang, basically a bear trap rebound from below the rising 50-day line around 17,800, broken that April resistance line there, the red line there around 18,000, and above 18,000 looking at the top of that rising trend channel from October as high as 19,100 by the end of next month. Obviously that would be quite a coup if we achieve that. RSI right in the place you want it to be, in the upper 50s, so that suggests we are set fair in terms of the upside. Only back below that price channel floor now on an end of day close basis, 17,800, really delaying the idea of a rebound. Moving on to the Dow, which had obviously a rather dismal start to April, coming down basically from the record highs towards the 37,500 level. The recent neckline resistance around 38,100, above that looking for the 50-day line 38,800. But let's see how we behave. In terms of the overall pattern here, you can see that that is actually where the trend channel is at the moment, and really above 38,000. The possibility is now that we could head up to that, or get that 40,000 plus target by the end of next month. RSI still below neutral 50, so it means or suggests that we're only just beginning the rebound for this market. Moving on to Bitcoin, and here a slight struggle, but with the 50-day moving average, the blue line there, that's around the 68,000 mark. So really looking for a break of both the March resistance line and the 50-day moving average at 68,000 to get us back up to the best levels at 73,000 plus. Moving on to Bitcoin, and here you can see we've got that rising trend channel in place since back on October. Obviously a bit of jiggery-pokery with a bear trap for just below 60,000 the other week, in the, I suppose, associated with the halving, etc. The current situation is that we've got to break the 50-day line and that March resistance line there at 68,000. Above that, obviously, we'd be looking for a retest of the record levels at 73,000 plus. Still on for 80,000 plus by the end of next month, while we remain above the 60,000 zone. On to gold, which had a bit of a rug pull after, well, I suppose quite a long time, waiting for a rug pull. But the current situation is that we're widening that rising trend channel from February, as I suppose we would expect. Support eventually came in towards 2,300, and looking for this market to consolidate above 2280, which was the previous low, and then retest the best levels towards 2450 rather, by the end of next month. Overall, the view here is that we could head up towards 2550 by sometime in June, so over the next 6 to 8 weeks, something like that. But obviously, the key here is holding at 23 or 22.80 over the near term. Moving on to the stocks, and quite a few decent situations in terms of behaving and hitting targets. We've got a double bear trap gap reversal here on the angle chart. Support really, I suppose, back at the old December lows near 11 pence. But that double gap up suggests that some bears have been rather caught out, and we'd be looking for a move probably along the lines of the lines I'm going to draw, so perhaps towards the top of a broadening triangle from back in January as high as 22 or 23 pence by the end of next month. But the key here, I think, holding above that 200-day line in the interim on an end-of-day close basis. Moving on to next up on the list is Asiamet, which seems to be benefiting from the copper prices as much as anything operationally the company's doing, but the rising trend channel base there heading for 0.93 pence, and we're looking for that perhaps as soon as the end of this month, while we remain above recent resistance on the way down at 0.78 on an end-of-day close basis. The sizzle here at the moment is the way the 50-day line is now rising, and the shares have consolidated above that. Moving on to another stock of note in the near term, which has been Block Energy. I think we're a bit late on it, but luckily the shares have kept on rising. The target here, the top of that broadening triangle there from back in October 2022, and that's heading with 2.25 pence rather. Looking for that by the end of this month, while we remain above the latest support for the shares around the 1.6, 1.7 pence area. The other highlight to note is the way that both the 50 and 200-day lines are both rising, suggests that we're about a week away from a golden cross, and obviously the golden cross is one of the strongest, or the run-up to a golden cross, one of the strongest parts of the cycle, as we have seen in recent days. The next situation is European metals, which we have covered quite recently. Here we've got this, we had our initial target there, 17.5 pence. Next target was up to 23 pence. Final target, maybe by the end of next month, if all goes well, up to as high as 33 pence, and the upside value while we hold above that 17 pence area. Onto a stock which has got a lot of sizzle. Elon Musk provided sizzle, and here it's actually quite comforting to see that the shares hit the top of that rather ambitious-looking trend channel I drew some weeks ago, 48 pence, and now we're left trying to work out what the next level up may be. That would be the upper parallel of the rising trend channel there, so we'd be looking for a target probably towards 70 pence by the end of next month, while we remain above the previous target there around 48 pence. But obviously we will keep this situation on a close watch. Moving along to another situation which was covered here a while back, but finally sprung to life over the last few days. We had an initial target there around 43 pence on Funding Circle. Next one up to 52 pence, and now we're above 52 pence, looking for the upper parallel of all those trend lines as high as 71 pence by the end of next month. And obviously the way things are going, that could be by the end of this month. But the key here, staying above that old target there around 52 pence on Funding Circle. Stock which I haven't looked at for a long time, I think probably since the good old days of the pandemic, when everyone was playing music at home. Here we've got a rising trend channel on Gear for Music from July. Top of the channel there up to £1.85, and that is valid while we hold above recent support in the £1.35 area. I suppose if you've got a deeper pocket, you'd be losing the 200-day line, currently at £1.28 as your stop loss. Another stock which hasn't been here very often in the recent past is Gresham, probably the most boring sounding company name, and that probably means that it's going to be a fantastic investment. Here we've had a bear trap from below the February support there, 48 pence. Above that we're looking for 65 pence, the old February resistance, and probably much more given the way that recent candles have been so strong. In fact, there's a gap as well, so it's a bear trap gap reversal one of our favourite setups. So 65 pence, hopefully the minimum. If you're a fan, you're probably looking for the 200-day line, which is up there near 90 pence. At this stage, only back below the initial April support at 40 pence, really delaying the upside scenario. On to Ovoca, and here, situation perhaps not as exciting, but shares are still up 20%. We had a gap close buy signal yesterday, and that means that we are looking for the top of that broadening triangle from back in December as high as 1.25 pence by the end of next month. And obviously the last two candles very strong indeed, opening at the low, closing at the high. A stock which hasn't had quite the same amount of sizzle in the near term has been Synergia, but even here we have the shares consolidating above the 200-day line, currently at 0.1 pence, and that leaves us looking at least for 0.14 pence over the next few sessions. There's always a chance, I suppose, of the shares having one of their periodic spikes to the upside, sort of 1 week wonder type spikes, and I think we're probably overdue one of those at the moment. Going on to Tower, and here you can see that the shares have nudged higher, breaking above the rising 50-day moving average, which is normally a positive at 0.02, looking for 0.027 by the end of next month, or even sooner than that. Upland has been looking encouraging of late, especially the way that for most of April to date, the shares have been above a rising 50-day line. That normally suggests bullishness ahead. The initial target here around 4.9 pence, the top of that rising trend channel from August, but we're looking for up to 6 pence by the end of next month, especially while we remain above the recent 4 pence support area. If you look closely at the chart, you can see that there was a decent hammer candle at the beginning of, well, basically yesterday, and that was a gap close buy signal as well. So hopefully that little bear trap type of maneuver will give the shares some upward momentum. Haven't looked at Venture Life for quite a long time, but here it looks as though we're in a wide rising trend channel from June last year, top of the channel there, heading for 55 pence. And after all the consolidation that we've seen for much of this year, especially the unfilled gap to the upside at the beginning of February, looking for the shares to finally jump up to the mid-50s while we are above the 50-day line at 37 pence. Nice consolidation with the RSI above neutral 50 as well, and that is normally a leading indicator on the upside. Next up is a stock which has done very well on in terms of the update today, Warpaint. And here you can see that the shares have broken into record territory when the shares actually appear, and here you can see actually hitting the top of that rising trend channel that we had as a target through £4.80. Above £4.80 now, looking for the upper parallel of that trend channel, which would be, I suppose, as high as £5.50, I guess. Over the next 1 to 2 months, in fact £5.70 there for that upper parallel line from October 2022. Ideally we stay on the right side of £4.50 in the meantime. Finishing off with Zenova, which seems to be rehabilitating itself at the moment. Maybe early days to call the end of the bear run here, probably looking for the shares to break the 50-day moving average on a weekly close basis at 2.2 pence. Above that we'd be looking for the 200-day line and the top of that falling formation at around the 3.8 pence level. That's it for me today. More updates tomorrow.